Echo, turn on the tall lamp.
Okay.
Hello, I'm Brittany Handura, real estate agent, coach, and investor, and I am here to talk to you today about market insights, what's going on. There's a lot happening that is changing, volatile, whatever you want to call it. But the reality is this has been happening. So what's impacting us today? What's impacting us right now? So I wanted to go through this newsletter that I get called the Playbook and talk about what it says and then my reaction to it as a realtor, as an investor, as a professional in this setting. So I'm going to jump in and share my screen, and then we are going to talk about it. But I always have to find it. Yeah, it's right here. Okay. There we go. Okay, so let's talk about the weekly housing trends. Mortgage rates are down, but barely. They're down to 6.74. Mortgage rates dipped a bit to 6.74 this week from 6.75 last week for a 30-year fixed rate home loan. At this time last year, rates were at 6.78%. So they have come down, but not enough to make anybody excited about what's happening or thinking like, woo, rates are coming down. This is happening soon. They're really just not dropping very fast, but they are coming slowly down. So, we were seeing rates in the sevens and we don't see that as much anymore. But always also keep in mind that these are averages. So it depends on your credit score. It depends on your loan limits. It depends on your income. It depends on a bunch of different things. The type of house you buy, the type of loan product you're getting. It depends on a lot of different things. It's not just, oh, you're going to go and get a 7 or a 6.78% loan. That's not necessarily the case. If you are VA, FHA, those are typically lower. If you're conventional, that's typically higher, but the more you put down, the lower that could be. So it really just depends on what your situation is and how you make that work. So that's something to talk with a lender about. I have a little bit of insight in that, but I am not the lending professional. I leave that to the experts. So the median list price right now is $449.50. This is, of course, across the US. So that has actually gone up. Wait, what happened? I stopped sharing. Hold on. Let me go back and share it because I wanted to read something. Okay, so here we go. Median list price $449.50. It's actually gone up. So it says down here, listing prices have inched up 0.8% year over year. Currently, the nationwide median hovers at $449.50. Now, here's the thing about that is that obviously that's nationwide. So that's going to differ based on where you live, what your area is, the type of house that you have, the condition of it, all of that kind of thing. The important thing are the trends. So what we've been seeing is that it's been going down, slowly, but still down. And this week it's trending up. So can we learn much on 1 week? No. But what we know is that this is not a crash. This is not something that's coming. If anything, it's a little bit of a correction. Now, I will say in different markets, every market is different. So it is going to be case by case and specifically looking at your area. But what we know is that in my area, we're seeing very similar things where the prices were dropping a tiny bit and they're starting to go up again this week. So it really just depends on your specific area. Now, in my area, there are some people who are saying, yes, prices are dropping. They're going to continue to drop. They're way overpriced. But even if the list price is higher, what we go by are really what's sold. So like if we're looking at a bunch of things have sold for $900,000, well, maybe some agent is going to come in and list it at $925, and then they're going to have to do a price reduction until they're selling at $875. Obviously, that's not what you want. And so you want to make sure you're working with a good agent. If you need one, reach out to me because I have good agents all across the country. But the important thing to note is that you want to make sure that you are, first off, pricing it right to start with, because in my area, and I'm seeing this all over, if your home is turnkey, this is specifically for the turnkey, but if it's priced low, it's going to sell higher still. You're still seeing multiple offers. You're still seeing it selling for a little bit higher. Now, of course, that's not all the time. That's not everywhere. That's not every case. But oftentimes when you're seeing things that are listed right, it's going to sell. Now, there are things that are priced too high to begin with, and now it's chasing the market down. That's the reality of it. That's what we're going to see. So when we talk about prices being lower, a lot of times that's what it is. It's that prices have to be reduced, and now they're chasing the market down instead of pricing it right to begin with, which is going to be that lower price. And now hopefully it can be, there can be a bidding war and you can get more for your house. So it really depends on the strategy, but it also depends on the condition of your property. It really depends on a lot of different things. But in general, even though, what's it say? The median list price has ticked up a tiny bit, we're still not out of the woods. But it does say it's gone up 0.8% year over year. So what's important there too to note is that over the past 5 years, it's been going up 4, 5, 8, 10% year over year, depending on your area. And so now instead of it's not saying it's dropping, but instead what it's saying is it's only going up by 0.8% year over year. That is a big difference from going up 5% even, but you have to understand that still means it's still going up. So when people are screaming about, crash is coming, it's not the same thing. It's not the same conditions that we saw before. So don't worry. It's okay. We're going to get through this. Okay, let me go back to this. So the number of homes for sale, the number of listings have gone up by 24.4%. This says it soared by 24.4% year over year, marking 89 straight weeks of more homes on the market. So this is year over year. It's not week to week. We're talking year over year. It's gone up 24%. That's significant, 24% more. But remember, we were in a drought of inventory. We needed inventory to come on the market. And I would say in my market and all of the markets I track, this is pretty accurate. It's about 25% higher than what we were seeing a year ago, 2 years ago. And so this is getting to be to the point where we're seeing this is post-pandemic levels. So, pre-pandemic levels. So remember, after the pandemic, inventory shot down, which is why prices shot up, because it's always and forever all about supply and demand. So we had nobody selling. Instead, we had extremely low interest rates. So people were cashing out, or not cashing out. They were refining, sometimes cashing out, and they were staying put, because now they're saying, okay, if I have a 2% interest rate, there's no way that I'm going to trade that up for a 7% interest rate. So what we're seeing are still the people who are selling are the people who have to sell. They're not people who are just sure, let's trade up my 2% interest rate for 7%. It's people who are saying, I have to sell because I have a job change, job loss, death, divorce, diamonds, and diapers. Those are always the things that people need to sell for. There's always all of that in every economy. And what we're starting to see, actually, I think it talks about it in this, but I'll give you a little spoiler. What we're starting to see is foreclosures tick up a little bit. Now, a year or two ago, it was almost no foreclosures. There were some, but remember, for a long time, there was a moratorium on foreclosures, so you couldn't foreclose. And then once that moratorium was lifted, now all of a sudden, banks can go after these people. But so many people, even if they couldn't make their payment anymore, so many people had enough equity in their homes that they were fine. They could sell their house in the traditional way, or they could cash out and have that money to be able to live off of. Now we're coming on the other side of that maybe some people haven't recovered from that. And so we are seeing more listings because people are they've taken on a lot of debt. They have a lot that's kind of drowning them, but they still have equity in their homes to sell. Now, some of the people that we're seeing have equity enough, or they had equity in their home and then they took out a big HELOC. And so they don't have as much equity in their home. They still have some, because remember, the bank is going to get theirs. And so they are saying you can have some money, but we're going to make sure that we still have 30% of the equity. So you're only able to take out a total of 70% usually loan to value. I mean, layman's terms, that means if you have a home worth $1 million, you can take out up to $700,000, but that still leaves $300,000 in equity in your home. So even if you say, okay, I took out this HELOC, I am maxed out to the 70%, and now something drastic happened and I need to sell, you still have that 30% equity in your home as a little bit of a cushion. Of course, that's not the case for everybody. And what we're starting to see is people who bought in the last 2 years or so and are now needing to move. Those are the people who are having a harder time. They have less equity in their homes. Sometimes it hasn't appreciated to the point where they are in, flush at all. And those are specifically going to be people who have put very little to no money down for FHA, VA kind of loans. What I always tell people is if you're going to buy, you have to make sure that you can withstand 3 to 5 years in this place. It doesn't have to be your forever home. I don't believe in forever homes. I'm a real estate agent, so it's easy for me to say that. So I get that there are people who want a forever home. But for me, I'm just like, I don't ever think that I'm like settled and I'm going to live somewhere literally forever. However, I know I always want to make sure that the home I'm buying, I know that I can stay in for a good amount of time, because you're not guaranteed to get that equity back. You're not guaranteed to get that growth back unless you stay for a long period of time, 3 to 5 years typically. Now, this is obviously not always the case, but historically, this is what we've seen, that, you stay even in the dips. They take about 3 to 5 years to recover, and you should be okay. So if you can stay somewhere for 3 to 5 years, you're probably going to be okay. Now, the other thing that what we've seen is we've seen a lot of cancellations. This is a spoiler. I think we're going to talk about this too, but we've seen a lot of cancellations, meaning somebody puts a home on the market. Maybe they have a buyer come, maybe not. The seller gets irritated. Maybe they have some price reductions and they end up saying, you know what, never mind. And they cancel the transaction altogether. They end up saying, I'm just going to stay here. Similarly for buyers come, they put an offer in, and maybe they found another house that they like better. Maybe they found that when you actually spell it out for them, they can't afford it. They can't afford the monthly payments. So there are lots of reasons that things are being canceled, but there are a lot more escrows being canceled now than there ever were before. Or not ever before, but in the last couple of years, there are way more cancellations happening now. So when you have a house under contract, it doesn't mean much until they get to the point where they're removing contingencies and doing things that are more of a guarantee. So just keep that in mind if you're looking to sell or thinking of selling or buying, is that things can change on a dime and have been changing because there's all kinds of craziness going on. All right, time on market has gone up to 58 days, which is up. So listings lingered 8 days longer this week than last year, giving buyers about 58 days to shop around. Now, this is something too that is dependent on the house, the housing type, the condition. So if you're a buyer looking to buy and you say, I want a turnkey house, I want it to be perfect, I don't want to have to touch it, I don't want to do anything, then you're going to be in competition with some other buyers, because everybody wants that. But if you're saying, you know what, I'm willing to put in a little bit of work, I'm willing to have it be a little ugly, a little stinky, a little whatever, then you're more than likely able to get a better deal. That's the thing, is that sellers have been so used to everything selling in like hotcakes. And, if it's been sitting on the market for 10 days, it's sitting too long, there's something wrong with it. They're used to that market. And now things are sitting for 2 months. 50 days sounds a lot like 2 months, right? So now sellers are starting to say, okay, I'll do anything just to get this thing sold, just to get it under contract. They're offering seller concessions, meaning they'll pay for certain things for the buyers. They're offering lower prices. They're offering better deals. So a lot of buyers can come in and get a better deal because the sellers are feeling a little more desperate. So something to consider certainly when you're looking at that, because sellers have this emotional pull to say, "Oh my gosh, it's not selling in 2 weeks." But that has a lot to do with also pricing. So you want to make sure that you're pricing it right and working with an agent who prices it right. All right, so let's jump in and see more of this. Okay, so this next one is silliness. We don't care about this. Okay, price cuts hit a record high. Zillow found that 26.6% of home sellers slashed their asking price in June. 26%, that's a lot. Highest level on record. Cuts are most common in the Sun Belt and Mountain West region. Check out what kind of discounts you can expect and other housing data here. Well, I'm going to talk to you about that so you don't have to worry about it. So this is exactly what I'm talking about. You can get discounts. If you're a buyer, you can get some discounts and you can take advantage of this market. We're not technically in a strong buyer's market yet. Technically, especially in my area, we're still in a seller's market, because that has to do with inventory, supply and demand, all of that kind of thing. But this market is shifting to the point where the buyers are able to get some better deals. They're able to get some things that they weren't able to in the past. So that includes getting some of these seller concessions. So sometimes you can offer a lower price and ask the seller to pay for your closing costs, and ask the seller to pay for some repairs, and ask the seller, for anything you want. Obviously, it's all a negotiation and the seller's able to say yes or no. But if they don't have any other deals, if they don't have any other offers on the table, they're much more likely to agree to that because they're feeling like, I need to get this sold. Especially because right now we still see that sellers, the people who are selling, are people who have to sell. They're not people who are saying, oh, let's just throw out my house and see what happens. They're people who either have to sell. A lot of times their house is just too small for them and they found something that works better for them. So it really just depends on what exactly you're thinking about, what you're looking for. But because of that, you could take advantage of getting some good deals. Home builders are trimming prices too. Price cuts for new construction hit a 3-year high in July. According to the National Association of Home Builders, builder confidence has remained in negative territory, under 50 out of 100, for 15 months straight. Although it did get a slight bump due to the passage of Trump's tax bill, which ushered in a slew of tax breaks for builders and investors. So this is something in my area. We do have a lot of building going on, but we don't have a lot of single family homes being built. So it's good because we do have building, because in my area, there is a huge housing shortage. Say what you want about the types of houses being built. It's like all, boxes and milk cartons. What do they call that? Anyway, you know what I mean? But it's homes. We need housing for people. And so that will make it so that we have more homes for people. There's less demand. And so we could see prices softening. But we haven't had building for a long, long time. We haven't had a lot of building at scale. And so because of that, it's just made it so that the demand is out there, but the supply is not. So remember, supply and demand, when you don't have enough supply, but you have high demand, the prices are all going to go up. And that's what we've seen. And so now what we're looking at is the demand is starting to be filled with certain, new homes being built and people being able to have housing. But the reality is still there's a lot of people who continue to move into these areas. So, I'm in California, and I'm sure we've all heard about the California exodus, but the reality is there's still a lot of people here and a lot of people who need housing. So, if you're trying to leave California, we can help you sell your house, but you're going to have buyers lined up waiting to buy because people are always trying to get into California properties. And that's the reality of it. For everything. Like, either side of the aisle you stand on politics, people are either trying to come or go. And the reality is there's always somebody right there to take their place. And it really is just about the price that they're willing to pay. Everything sells for a certain amount. And so, like, if you have a listing that's just like chasing the market, it's going to sell at some point. There's going to be a number. It's just a matter if you as a seller want to agree to that number. All right, next up, don't count your home sale before it's hatched. This is what I was talking about. Redfin found that 1 in 7 pending home sales fell through, the highest level on record. The reason? Many buyers are backing out because they found a better deal elsewhere. Sellers will have to scramble the hardest. What am I trying to say? Sellers will have to scramble hardest to hang on to buyers in Jacksonville, Florida, where 1 in 5 contracts end up canceled. I think, well, that I already talked about this, and this is true, that there's a lot of stuff that's being canceled. 1 in 7 sounds like a lot. 1 in 5 sounds like even more. And then when I talk anecdotally to escrow officers and people in my area, they're saying it's even higher, 1 in 3 sometimes. And so, I mean, that just again goes to show you that you are able to get under contract if you have an offer accepted. If you're a seller, hold on to that. This is why sellers are offering concessions. They're saying, yes, please take my house, because so many of these contracts are falling through. And so when you have that, you don't want to let go of these buyers who are saying, oh, but actually we saw this home down the street that we might like better. The sellers are going to say, no, what else can we offer you? We'll take out the carpets. We'll give you a credit. We'll pay for your closing costs. We'll do whatever it takes, because they want to hold on to you, because they don't want it to fall through. That's going to be much worse for them and more expensive, because what happens, it goes back on the market. They might have to do a price reduction because people are saying, what's wrong with it? And now that just makes it so that they net less money overall than if they were just to give some kind of concessions to the buyer that they already have. Capital taxes could disappear. So President Trump announced considering removing the capital gains tax on home sale profits in an effort to invigorate the stagnant housing market. Although taxpayers are already exempt from capital gains on the sale of their primary home up to $250,000 per individual and $500,000 for married couples, about 15% of homeowners may exceed this cap and could stand to benefit, according to the National Association of Realtors. So this is something that, I mean, again, it benefits a couple of people and not that many, but okay. It actually probably benefits more people in California, because $500,000 for a married family. Well, if somebody's been living in their house for 25, 30 years, they probably have a lot more than 500,000. But keep in mind with capital gains taxes that if you own a house paid off that is $1 million, you sell it, you don't have any taxes on the first 500,000. And then after that, you have taxes on the amount above that first 500,000. So you're not paying capital gains taxes on the full million. You're only paying capital gains on that top 500,000. So I hope that makes sense, because it was an even number, so it was a little confusing. But anyway, you get it. That capital gains taxes can be a lot, and they might be doing away with that. And we'll see what ends up happening, because nobody knows with what's going on. Who could tell? So let's keep going. Foreclosures are rising. See, I told you I had spoiler alert for you. Foreclosures are rising. Adam found that 187,000 homes, 1 in every 758, yeah, that's right, ended up in foreclosure during the first 6 months of 2025, representing a 5.8% increase from the same period last year. This is bad news, although still far lower than the foreclosure heyday in 2010, when over 1.6 million homes were repossessed by banks. Still, it's a worrisome sign that financial strain is ticking up. So again, this is something we talked about, this where foreclosures are going up, but I mean, think about that, 1 in 700 and almost 800 homes. That's not a huge amount. And a a lot of people have some equity in their homes that they could get out of and sell traditionally before they were foreclosed on. Unfortunately, people get to that point of being in foreclosure and all of that, and then they feel like they have no other options. So if that's you, reach out to me because I can help connect you with an agent who can probably help you. So foreclosures are really, like it's a bad sign that it's increasing from last year, but also remember that there are different factors at play. Now, people point back to 2008, 9, 10. But remember, the reality of 2008, 9, 10 is that there was a huge housing crash, but the housing market was the housing and the banking industry, they were the ones that collapsed the market because they were giving out bad loans to people that they couldn't afford. They were saying, okay, here's a loan for 80% of the property, and then here's another loan on top of that for 20%, and then maybe we'll give you a loan for a little bit more to cover your closing costs. People were literally getting in with zero down, and then they couldn't afford things when they changed. They couldn't afford it when like they had a job loss or a job change or all the things that happen in life. And on top of that, most people on their second mortgage, which was like the smaller amount, but still 20% usually, that was an adjustable rate mortgage. And so if the rates went up, their interest rates went up, their payments went up. Then on top of that, it was usually a balloon mortgage, which meant that the full amount was going to be due at a certain time. All of these loans came due at once, and guess what? Nobody could pay them. So now nobody's paying on all these loans that are due. They're being called due. Nobody's paying on them. And so now the banks are like, we can't afford to service our loans. We can't afford to do it all. So they're trying to short sale the loans that they have. Now also the people who own the houses can't afford the houses that they have. So they're trying to short sale everything. And it ends up not working out for anybody. The total economy crashed because of the housing market. That is not the situation we're in today. Lending practices have been modified. They've been changed. They do not give out loans like that anymore. They don't, like, the people who have loans by and large can afford to pay for them. They've been vetted. They've been checked, their credit score. I mean, if you've done a mortgage anytime recently, it's intense. And so that is not what we're seeing now. The people who are in homes can afford them for the most part. The people that we're seeing get foreclosed on are people who are losing their jobs and stuff like that, which unfortunately we know that it's ticking up, unemployment, and it probably is likely to continue ticking up just because of the volatility that we see in the economy as a whole. So if that's the case, we may see more foreclosures, but again, people usually still have some equity in their home to either pull out to be able to let them live until they find another job, or they're able to sell before they have to be foreclosed on. So there are options there, mostly, but that's kind of the overall big picture of why this is happening, why it's not the same as 2008, 9, 10, and why we're headed for a different outcome. It's not going to be the same as what we saw. Now, will it get bad? Are we headed for a correction? Any of that kind of stuff? Potentially, because there's so much volatility that we don't know about. This is why I tell you, for buyers, buy something that you can be in. You can comfortably afford the payment for 3 to 5 years. Don't buy a 1-bedroom condo if you're thinking about starting to have a family. Don't buy, a 2-story house if you're thinking that you're going to end up being in a wheelchair or, anything like that. You want to make sure that you're thinking ahead 3 to 5 years. You don't have to say, is this my forever home? And am I going to be able to live here forever? To me, that's unrealistic. You don't have to worry about that, but you do want to think about 3 to 5 years down the line. All right, let's see what's next. Let's see. Landlords are shifting gears. Okay, let's read this. because I do have a thought on this. Okay, landlords are shifting gears. A survey of 1,600 plus landlords by Rent Ready and Bigger Pockets found that only 53% plan to buy a new property this year, a steep drop from 67% in 2024. The top reasons include home prices, interest rates, and sluggish revenue growth. Half have even paused some renovations, although most still plan to funnel around $5,000 this year into upgrading what they have. So the landlord thing is interesting because, like not everybody is in the same boat as a landlord. Not every landlord is on the same page. A lot of landlords own one or two properties. It's going to be very different from landlords who own, a couple of 10-unit buildings. So it looks very different, but I know in my area, they're really pushing a lot of rent caps and things to help the consumer. And it doesn't necessarily help line the pockets of landlords. And so when you're thinking about that as a landlord, as an investor, you want to really think through what is that going to mean for your long-term growth? Because in California, we really recognize that it's not about the cash flow, it's about the long-term appreciation of the property. Eventually, you will get cash flow and it'll be great, but California is not a short-term play. It is a long game because you're really buying into the appreciation, because most places you're not going to be able to cash flow right away. Some places you might get lucky, especially if you own something, bought it, and then moved out and rented out that place. Maybe that'll work for you. But by and large, California is not the place to come and just like have a cash cow. It can work for some, and it does work for some. And most of the time, California is the long game. So when you think about like rent caps and all of that kind of stuff, remember, rent caps are not the worst thing in the world. But what ends up happening, I kind of feel like this is the story all the time. Like you're trying to help the consumer, and then sometimes it makes it worse for the consumer, because what ends up happening is that because landlords know that they can only do a 3 or 4% increase every year, they are for sure doing that 3 or 4% increase because they don't want to get, 6-7 years down the line, the market rate goes up for that rental, and now they can't recoup that money that they would have been getting. Whereas before, what it could have been is, like I knew a lot of people who would have the same rent for like 15 years. That is almost never the case anymore. Almost always I hear about and I see people whose rent is going up every single year because the landlords know that they have to do that if they want to continue making money. So good or bad, that's realistically what it is and what's happening there. Okay, let's move on. Let's see. The most boring city in the US, that is okay, I wanted to talk about this. Words to learn, iBuyer. So this is actually way more popular back a couple years ago, but I don't know, apparently they're wanting to tell people about it. So let's read about it. So iBuyer, it's short for instant buyer, and iBuyer purchases property in a flash with cash, offering home sellers an easy escape hatch to offload their home without the hassle that comes with a regular buyer, such as lenders, appraisers, inspectors, and other red tape. iBuyers then freshen up the house with paint and repairs and then put it back on the market. Just over 1% of all US homes end up sold to an iBuyer, and the biggest fish in the small pond is making waves of late. Opendoor, a 10-year-old startup that's recently morphed from a penny stock into a meme superstar status. That's thanks to plugs by Reddit's Wall Street Bets, which fueled the infamous GameStop mania in 2021, and hedge fund manager Eric Jackson, who touted Opendoor's potential to become a 100-bagger over the next few years. Is Opendoor really all that? Although shares shot up 400% in the wake of its recent endorsements, the heavily shorted stock has hit a wall in recent days, with skeptics pointing out that the company has reported adjusted losses, blah, 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 blah. Even Zillow tried iBuying but bowed out in 2021, leaving Opendoor as the only national player left in a very sluggish housing market. Although Opendoor's ultimate fate remains to be seen, the recent buzz around its stock has likely sparked some curiosity over what it's doing in the iBuyer space. Okay, so the iBuyer thing is interesting because there are 1% of the population of people who say, I don't want to deal with a buyer. I don't want to deal with anybody. Just pay me cash. This is sometimes you see those signs like we buy ugly houses. That is kind of an example of an iBuyer. They're just going to go buy it, not have any hassle, cash, they're not going to worry about it. But realistically, they're going to flip it and they're going to put it back on the market because, they need to make money somehow. Now, a lot of times what you guys will probably see is you go into a flipped property and it's not done very well. It's not the highest quality because they're trying to turn as much of a profit as they can. So they don't do things with the highest quality. Neither here nor there. It's just the model and that's what it is. Now with this Opendoor, it's interesting because they're talking about the stock prices and it being a meme stock and blah, 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 whatever, who cares? The model of it is interesting and I think funny because this is kind of something like as a real estate agent, I see this a lot where people like a seller will choose to work with a specific agent because they have an easy exit strategy or something like that, which is something that I offer, by the way. But the reality is that based on the the contracts that are signed, every exit is easy exit. And so that's just an example to say like some people take it and market it in the way that people want to hear and make it easy for somebody. That is great. And as a real estate agent, I can do the same thing. I can be like, hey, I can sell this to an investor and make it quick and easy. No showings. We don't have to worry about all of that. Sell it for cash. Done. I can do the same thing, but it's about communicating that to the sellers. So if you're a real estate agent listening, implement that in your strategy, because if like Opendoor is now, people are starting to look at it more and more and they're saying, hey, I want to do that. That sounds attractive to me. As a real estate agent, you can also do that. So just keep that in mind. And if there are any buyers and sellers listening to this, your real estate agent can do that. And if you need help finding one, reach out to me. I can help you. Okay, I'm going to shift gears now because I talked through that newsletter and there's nothing more that I want to say on it. But I hope that was helpful for you. But I did talk to ChatGPT. You guys know I love talking to ChatGPT. And I asked her basically, what are the questions that buyers and sellers are asking this week in light of the market, the economy, what's going on, all of this stuff. And so I wanted to share with you what her thoughts were. Yes, I say she's a her. I wanted to share with you what are her thoughts and tell you what I think and give you my perspective because no one asked. So let's jump into that. Let me see. Where did it go? I just was seeing it. Here it is. Okay. Okay. This one is for both buyers and sellers. Are interest rates going to drop soon? And should I wait? So ChatGPT's answers is rates have held steady, but aren't expected to drop dramatically anytime soon. If you're buying, marry the house, date the rate. You can always refinance. If you're selling, waiting could mean fewer buyers if rates spike again. The best time to move is when it makes sense for your life, not based on guesswork. And also they added a CTA. DM me if you want to time your move based on your situation, not the headlines. Love that. You heard the woman. DM me if you want to figure out your strategy. Link in bio or link in the description. Okay, so most of this I agree with, that rates have stayed steady. They're probably not going to drop anytime soon. Remember, mortgage rates are more tied to the bond market than the stock market, inflation, yada, yada. So while that does have an impact, it's not directly tied. So right now we're seeing that interest rates, the Fed interest rates are holding steady. We can likely see that these are going to hold steady for a while. I'm not really hearing that anybody's predicting that they're going to drop anytime soon. So I feel like this marry the house, date the rate is a little controversial, but you want to go into this understanding what this means. Because I do feel like it's a fair statement. You get the house that you want. The rate you can refinance later on down the line. So if you don't like the rate, if you don't like the monthly payment that you have, whatever, you can change that later on down the line. But the question is, when is it going to change? And the answer is nobody knows. And so you don't want to get into a situation where you're uncomfortable with the payment, where you're stretching, where it's like not feasible, because then where does that get you? Into foreclosure. You don't want that. So when you talk about marry the house, date the rate, as long as it is comfortable for you, you want to get into a payment that is comfortable and not something that's going to be breaking the bank every month and have you struggling to get by. So marry the house, date the rate, yes, but keep in mind that you might be in a long-term relationship with that date, with that rate, because we don't know when it's going to change. And as far as sellers, right now we're seeing that there's more inventory, less buyers, and still the buyers are kind of winning out a lot of the time because the sellers are having to do price reductions, they're having to offer concessions and all of this kind of stuff. If the rates go up, you're going to have even fewer buyers, and you're going to have more buyers asking, hey, can you pay for a rate buy down? Can you pay for a seller concession? Can you pay for something to help me out to buy this house? So if you're a seller, selling now is generally the best. Like if you're thinking, okay, I'm going to sell within the next 6 months, now is the time to do it. Especially because when you take in, like if you're really thinking I'm going to sell in the next 6 months, the summer is the best time to do that. You do not want to wait until winter unless you absolutely have to. Because what happens in the winter, everything goes kind of quiet. And so there's fewer buyers, there are fewer sellers, and everybody knows that if you list your house, or it's kind of understood that if you list your house in the winter, it's because you have to sell. So buyers can probably get a pretty good deal for that. So just keep that in mind, that you need to sell whenever it is best for you to sell, but you also want to think about, if you're going to sell in the next 6 months, now is the time. All right, so for buyers, are home prices going to crash with all the market uncertainty? The answer, no crash is expected. What we're seeing is a market correction, not a collapse. Prices are softening in some areas, but inventory is still tight. That gives serious buyers a unique window before competition ramps up again. So if you want to buy while others are still on the sidelines, let's talk strategy. Link in the description. I love that it has that for me. That's so funny. Okay, so no crash is expected. If anything, it's going to be a market correction. So you should not be out here saying, if you're a buyer, you shouldn't be saying, I'm waiting for the crash. It's not coming. It's not going to come in the way that you think. I have so many stories of people saying, I bought this house in 2009 for $200,000 and now it's worth $1.5 million. It's not going to do that again. Maybe it's worth $1.5 million, but it'll sell for $1.3 million. But that's the correction. That's not a crash. And so we have to understand there are zero indicators that a crash is coming. Now, full disclosure, we don't know what's happening in the future because this administration doesn't know what's happening in the future. But by and large, there's nothing that we're seeing right now that is indicating a crash, at least from historical understanding. Okay, let's see. Should I buy now or keep renting until the market calms down? That's a good question. And I do hear this from renters sometimes. Rents are rising and you're building someone else's equity. If you can qualify and find a home that fits your needs, this could be your chance to buy with less buyer competition. And of course, I'll run the rent versus buy math for your exact situation. Just send me a DM. Okay. I don't know why I think that's so funny. I didn't ask them to do this. They just said, she just put it down there for me. Okay. So when we talk about rents, the easy answer is always like, okay, well, whose mortgage do you want to pay off, yours or your landlord's? Obviously, nobody wants to pay off their landlord's mortgage. But sometimes renting is the right answer, because obviously when you buy something in general, you have to put something down. You almost can never get in with literally $0 down. Even for a VA loan where you are putting down 0%, you still have closing costs. Now, of course, you can try and right now is a good time to try and get the sellers to pay for that, but you still have to consider that there are some fees that you're going to have to put down. So when we think about like, if you have to put down 10%, let's just say, of a $500,000 home, what is that? 50,000? 5,000. Now I have no idea. Hold on. Wow, embarrassing that I have to do this. $500,000 times 0.05, $25,000. I was wrong all around. Okay. So if you're putting down 5%, $25,000 is still a lot of money for most people to come up with if they've been renting all this time. So the reality is that rent is an okay thing for a period of time. Sometimes you have to pay that before you can move in somewhere. Now, I will say, don't get too comfortable with what you are renting. This is what I tell my younger sisters all the time. Don't rent something that is so fancy because you'll never be able to buy that, at least not yet. So you're going to have to basically downsize into something that's way worse for yourself if you get comfortable in this like nice fancy apartment. So make sure that if you do have to rent, that you're renting something that is reasonable and not like so bougie. So keep that in mind. But in general, buying is better than renting because over time you're getting that appreciation, and that is going to trump any repair costs, any kind of like you do a break-even analysis. Buying always and forever is going to trump. Oh, I don't want to say that. Is going to beat out renting. However, in the short term, renting does make a lot of sense for people, especially if you're just getting your life, you're just starting out, you're just getting back on track, whatever it is, renting makes sense and that's okay. But also rents do go up most every year. And that's something to consider because that's what we're seeing is that rents are going up every single year. Just like we talked about, they're going to continue to go up, even if you have a rent cap or rent control or anything like that. So they still go up. Okay, where are we? Buy now or keep renting. Okay, so for sellers, is it still a good time to sell? The answer is yes, but pricing and strategy matter more now than ever. 100% agree. Homes that are move-in ready and priced right are still flying off the market. 100% agree. The days of throwing a sign in the yard and getting 10 offers are over, but serious buyers are still out there. 100% agree. Want to know what buyers are paying in your neighborhood? I'll send you a custom update. Thank you, ChatGPT, for throwing that out there for me. Okay, so now I forgot. What did it even say? Is it a good time to sell? Yes, but pricing and strategy matter more now than ever. This is 100% true because if you think you're just if you say, hey, the Zestimate on my home, the Zillow estimate says it's worth $1 million, and then you have 5 agents who come and say, you need to list it at 915, you better list it at 915 because probably the only way to even have a hope of getting it to $1 million is to list it lower and have a lot more buyers' eyeballs on it. The wrong thing to do is to list it at $1 million because then you're going to be doing price reduction after price reduction after price reduction, chasing the market to where you probably are going to end up selling it for like $850. That is the problem right now, is because the Zillow's estimates are pulling things from 6 months ago that are irrelevant right now. The prices of what sold 6 months ago don't matter. You need a real live person helping you figure out what exactly is it in your area that a house is going to sell for. Okay. And of course, if you, oops. Okay. If you need an agent, if you're not working with one and you need one, reach out to me. I can get you a great agent all across the country. Okay. Last but not least, should I list now or wait until fall? What a great question. I feel like we just talked about this. And the answer is that depends on your goals. Fall can bring fewer buyers and more price reductions. We don't want that. If you want to maximize your sales price, listing before the next rate hike or economic shift could be your best move. I'll do a no pressure strategy call to help you decide what timing works best for you. Link in the description. Why do I think that's funny? I don't know. Okay. So, should you wait until next fall? Probably the answer is no, unless you have to. Sometimes people have to wait, and the timing is what it is. But again, that really depends. I mean, that you still have to be really strategic about your pricing, because especially if you say timing matters and I can only list it in the fall, or guess what? Fall is very close to winter. And so you don't want to wait and have it sit and drop the price and drop the price and drop the price, because chances are you won't be selling until spring at a lower price. So you want to make sure that you are really very diligent about exactly what the pricing is going to be, because that's what is going to get your home sold fast, is going to be your pricing strategy. So just keep that in mind. Talk to an agent who knows a thing or two, because they really are going to help you understand what you should price your home for, what the best strategy is for, and the timing of it. Because if you're thinking of selling in the fall, traditionally the spring and summer are the best times to sell. So if you're thinking of selling in the fall, now might be a better time to do it. All right, guys, that's all I have for you today. If you're an agent with me, be sure to follow along and come to my agent trainings every Tuesday at 9:30 a.m. Pacific Standard Time. If you are a buyer or a seller, for real, there's a link in my description where you can schedule a strategy call and we can talk. Of course, I can help connect you with agents all over the country. My name's Brittany Handura, real estate agent, coach, and investor. I'm here to make real estate easy for you, whether you are an agent, a buyer, a seller, an investor. I can help you with it all. So thanks for joining me, and I will see you next time. Bye.